Welcome to Trading Lounge and the Australian Report. We'll look at the ASX 200 and also the finance sector, the XXJ. And with the ASX 200 here, we've still got more to move up into this structure here, into wave E. It's not finished yet. And obviously the resistance is the trend line through here and also the 5-8 as well. If I was wrong in this count in any way whatsoever, then in terms of like wave B finishing here and wave C moving down here lower, if we needed to go longer term long, if there's an error being made, then we'd need to wait for support on the 5-8 here. So it's not like we're going to miss anything. It's just that we need to follow this structure to the upside, and there will be a reaction in this space here. But after that reaction here, if we get some sort of corrective pattern to move on top here as a normally it would move in the arrival, the reaction, the first high above the level, then an ABC pattern, and then finding support here. Well, then we would just look to go long on these levels here on the as such if they're triggered on this side here. So that's what we'll do if they're, because it does look like the banking sector, the XXJ, can push much higher, and that's going to influence this scenario here. The only other sort of picture that I can sort of see here for this, if I've made a mistake and there's upside there, is having the B wave here and having the C wave here, and this would be an A and a B and a C wave for the B wave, and then an ending diagonal triangle, which is normally in 3 waves as well. So wave 1, wave 2, wave 3, wave 4 and wave 5, but it doesn't really look very neat and tidy, for that to occur, but it's a possibility. But if that's the case, then this is how we're going to handle the situation here, because if it does make support here, then we need to be looking at these highs being taken out and this wave 4 in place already in here. So just, it's good to have that plan B as such. So just wanted to talk about that for a moment. But this week has been about trading long in this section here. So let's just go in through the different time areas and have a little look at this. Well, one of the first things here is that this was our target area here, but I know that in this particular triangle pattern through here that the 61.8% retracement levels have been taken out and they've been moving up to the next Fibonacci levels in retracement terms. So it's not like a big deal, but it has consolidated here. But this consolidation here appears to be corrective, so that means that we should be making a new high above here. Okay, so we'll be exploring that as we go in here a little bit further. So from the 4-hour chart to the daily chart here, I've rearranged my account a little bit based on the cash market here, and this I may have to come back and change it again, but what I wanted to really sort of point out is that the move down through here is in 3 waves here. So we need to look at this market moving higher from this point. If this low here gets taken out, then like today, if it just came, if it came straight down through here and took this low out, then I know that we would, have that top in place. But this is corrective here, and on the cash market, this also suits a nice wave 4 here. So we need to look at this as still moving higher here based on this. Now, today's what we normally find in the bullish weekly cycle is that if Friday closes strong, then Monday will push up, then Tuesday will be profit taking, normally in the morning session, maybe not all of the morning session, normally part of it, but it can be all of the morning session, and then push higher in the afternoon. So it's a bit of a V-shaped day, and then Wednesday can be the same as well. It can open higher and then trade lower, and then trade higher for the day. So another V-shaped day, where Thursday is normally the bear day. But if Thursday is the bear day, then that's going to leave Friday and Monday as bullish days. So if Thursday is a move to the upside, then I know that the bullish cycle has changed and will be in a bearish cycle at that stage. So they're very they're you know they're very it's a handy little thing to know the bullish weekly cycle. So yeah, let's see how it pans out today. So on the tick chart within here, this is sort of how I was looking at it now, with all of this being wave 1 here and wave 2 here, then 1 and 2 and 3 and 4 and 5 to the third wave, the fourth wave here, then 1 and 2, and the third wave should move up higher here, can correct first, then move up into we're looking for 5 waves, and we're looking for a powerful wave in this third wave here, then a fourth and a fifth wave up through here. So if the 5, 7, 20 here in group 1, group 1 from 5, 7 is 10, 20 and 30, and we've got a nice tested support on this, so that means that we need to be looking at the long trade here. There will be vibrations across the midpoint here, the 50, but then should push up into group 2, where you'll have your next set of corrective patterns. But on the bearish side, I always use 2 here, so as a retested resistance. So if we get the pivot within group 1 here, the number 2, as a retested resistance, then we need to be bearish at that stage. So that's where your stops can go in when you're climbing to the upside like this. Now, what I want to point out here, just on the trading levels charting program here, this is the XXJ here, and it does suit quite nicely as an A wave, a B wave and a C wave in here, and if that's the case, then we'll be pushing up higher. But the move in here too can also be counted as a B wave, so from this high 1, 2, 3, 4, 5 to the downside here as wave A, then a wave B back up, then 1 and 2 and 3 and 4 and 5 here. So this can be called in as a B wave in this scenario here. Otherwise, we need to look at it as a 5 wave structure, as 1 and 2 and 3 here and 4 here, but we get the overlapping wave structure with wave 1 here, and then there's a very clear 5 waves here. So there's part of this structure I can see very clearly here. The other point to this here is that I also know that we've got 5 waves up to here. I know this consolidation here is bullish corrective because it's got overlapping wave structures, so we should be pushing up here higher from this. So from this high here to this low here, the 61.8% retracement level would take us to 6.5 here. If I was looking at the Elliott wave structure in this here, I need to be a little bit careful about this, but basically that's wave 1 here and wave 2 in here. So we can be looking to move up into wave 3 and then 5 here, because third would need to be as same as 1 or longer here. Yeah, and we could only turn bearish in this here, in this whole structure, if that consolidation point here was breached here. If this area here got breached, the 7-1, then we would be in bearish mode. So really, the banks are in bullish mode. This is the banking sector here, and then we look at stocks like ANZ's got quite a nice bullish picture here as well, because from the low here I can count 1 and 2 and 3 and 4 and then up for 5 here. Okay, then an A wave, a B wave, and then a C wave in here for wave C of B or 2 here, and then this counts as wave 1 here with an A wave, a B wave and a C wave here. So this is a classic trading levels pattern sitting at the levels here. So really a breach of this area up here would send us long and would send this market up here higher from this here. We could take a position in this space here There would be higher risk with this because it could fail. So we might look at going long, but we'd have to put up with Thursday being the bearish day as well, and we need to keep stops. You need to keep stops under under these lows here. So there'd be quite wide stops. So the position that you would take in the banks if you're going to the long side would really only be like a third of what you would normally place in here, and then we would look to build on top here, because what we need to see in this space here, we need to see the next 5 wave structure coming into play here as such, and then we would get our reaction from here, which will probably come on the Thursday, and then the Friday and the Monday could push up in that case. So we could take a small position in this space here for this, but there is risk involved because we're below the level. That's the main point with this here, and that's what the trading levels do. They kind of keep you safer. Sure, you can get a better position in and so on, but it's just a safe way of moving forward, as we don't have that level there as support yet. So I'll work on this a little bit here, and we might put a trade into the banking sector, but make it make it just a third of the normal size. All right, I'll leave it at that. Cheers.